Have you ever stopped to think, all that time you spend poring over candlestick charts, chasing random altcoins, and trying those so-called buy low, sell high tricks, they're actually the biggest roadblocks standing between you and 10x your wealth. Yep, the harder you grind at trading, the further you might be from real financial freedom. Hear why you're pouring your most valuable capital into a gamble you know nothing about. This game's never about skill, it's all luck. The big players and AI algorithms always come out on top, while regular folks like you just get taken advantage of. If you're tired of being someone else's pawn in this old system and ready to take full control of your money, hit that subscribe button down below and turn on the notification bell. This channel is made exclusively for sharp people who want to uncover the real truths behind how money works. Today's video is going to completely change how you think about investing. We are diving deep into a full breakdown, the actual playbook to go from working a 9 to 5 to building real wealth like an investor. Stick around till the end, and you'll learn about 3 under-the-radar spots where life-changing, hundredfold opportunities are hiding. If you don't want to spend your whole life trading your time for cash, let's get started right now. Welcome to Chapter 1, Shatter the Illusions. A lot of people think investing is all about buying low and selling high. They figure if they're smart enough and stare at charts long enough, they can cash in big from the market. But I've got a harsh truth for you. In the mature financial markets across the West, regular retail traders who flip short-term positions, buy altcoins and follow market hype are doomed from the start. Supercomputers and Wall Street pros have already rigged the game with their algorithms. You're never gonna get rich this way, you're guaranteed to lose. Let's kick off with the first big trap, altcoins and meme coins. Back in late 2021, the Western crypto world saw a huge scandal that shocked everyone. A crypto token named Squid Game token blew up, riding the wave of Netflix's hit show. In just a few days, its price skyrocketed from a few cents all the way to an insane $2,861. Tons of young people across the US went crazy on Twitter and Reddit, convinced they'd found their ticket to 10x, even 100x returns. But just minutes after hitting its peak, the price crashed to basically nothing, a mere 0.00079 cents. The development team locked all sell functions and ran off with roughly $3.38 million from regular investors. This is the infamous rug pull in Western crypto circles. You think you're chasing massive gains? Truth is, you're just a walking ATM for scammers. In the unregulated altcoin space, you'll never outrun insiders who can shut down trading with a single click. You might say, fine, I'll stay away from altcoins and just trade legitimate US stocks with quick short-term plays. Then you've definitely heard of the legendary GameStop saga, the epic battle between retail traders and Wall Street back in 2021. The Wall Street Bets community on Reddit rallied regular investors across America to buy up GME shares. They drove the stock price from around $10 all the way past $480, leaving several big short sellers down billions. Headlines everywhere screamed that the little guys had won. But what the stories leave out is what happened next. Once the hype died down, regular folks who bought in at the peak got stuck holding the bag. Take that famous story everyone talked about. A young truck driver put all his savings into GME at $400 without telling his wife. The stock tanked 90% in days, and his family ended up broke. Here's the hard truth. When markets go wild, retail trading platforms like Robinhood simply pull the plug. They block regular investors from buying while letting big institutions sell off freely. The rules of short-term trading were never fair to ordinary traders. Now for the third and deadliest trap, high-risk speculative derivatives, especially zero DTE options. Plenty of well-paid programmers and executives here in the US think they're super smart. Back when tech stocks were soaring, many got tired of just buying regular shares and started using leverage to trade zero DTE options. A real story went viral on Silicon Valley forums. a senior engineer at Google tried shorting Tesla options to score 10x returns in a single day. But then Elon Musk dropped a huge positive announcement that day, sending the stock rocketing skyward. Thanks to the massive leverage built into options, within just 4 hours, this engineer lost the entire $1.2 million stock portfolio he'd built up over 7 years at work, and even ended up owing his brokerage a ton of money. Wall Street's high-frequency trading, or HFT, algorithms operate at microsecond speeds, while humans take hundreds of milliseconds just to react. Gambling against these supercomputers in high-risk markets is like trying to stop a speeding train with your bare body. Altcoins, short-term trading, and high-leverage speculation. These three real stories from Western markets make one thing clear. If you chase quick riches outside your wheelhouse and rely purely on luck, the market will take everything from you in the harshest way possible. Now that we've seen all these traps, where should regular people actually put their money to safely and steadily grow it 10 times over? Chuckles, hold on a second. Warren Buffett already gave us the answer long ago. The best investment you'll ever make is what we're going to talk about next, investing in yourself. After hearing these three heartbreaking real stories from Western markets, you might feel discouraged and think, are regular folks forever doomed to get ripped off with no way out? The answer is definitely no. Most people lose because they pick the wrong battlefield right from the start. When you only have tens of thousands or hundreds of thousands of dollars to invest, what you truly lack isn't stock tickers or those skyrocketing stocks. It's a solid safety net to hedge risks and steady cash flow to keep going. At the investing table, a tiny stake means you don't even get a seat to play. So now that we're steering clear of these deceptive money traps, how do you take the first real step toward building wealth? The answer is definitely not buying stocks or mutual funds. Instead, put your money into the one asset in the world that guarantees returns. No manipulators can ever take advantage of it. That asset is the person staring back at you in the mirror. And that brings us to Chapter 2, Build Your Defenses. Learn how to make your greatest asset, yourself, grow in value endlessly. Why do I call investing in yourself endless growth of your human capital? Here's the thing, every external asset out there, stocks, real estate, crypto, their values are set by others. They can vanish overnight, but knowledge and skills you've locked inside your mind, inflation can't erode them. Market manipulators can't short sell them. No one can ever take them away from you. This is your one true, unalienable asset that's fully under your control. So many people get it backwards. They think, I'll learn and improve myself once I'm rich. But here's the hard truth about wealth. You can never earn money that exceeds your level of understanding. What you own right now is a direct reflection of how much you know and think. If you want to grow your capital tenfold, you first have to turn yourself into a vessel capable of holding that much wealth. And the very first step to build this vessel isn't poring over complicated financial reports. It's giving your mind a full, fundamental system upgrade. That's what we'll dive into next. Section 1, Rewire Your Mindset. Unlock the lasting drive that keeps you growing long-term. So what exactly does it mean to rewire your mindset? It's not about memorizing famous quotes. It's about overhauling how you fundamentally think about three core things: wealth, assets, and time. Once your way of thinking levels up, you'll realize those dead ends that used to trap you are actually full of opportunities. To show you just how powerful a shifted mindset can be, let's look at three true stories from Western business history, people who completely turned their lives around just by changing the way they thought. Let's start with the first story, Alex Hormozi, a breakout entrepreneur who's taken the Western business world by storm in recent years. Back in his 20s, he worked full-time as a fitness coach, putting in 14-hour days and running multiple brick-and-mortar gyms. He traded his time and physical labor non-stop to make money, yet he quickly realized his income dried up the second he stopped working. He was trapped in the endless cycle of trading time for cash. Then he had a major mindset shift. He figured out his most valuable assets weren't the treadmills and workout gear. It was his proven knowledge and step-by-step systems to turn a brand new gym profitable in just 30 days. So he made a bold move and sold his physical gym locations. He packaged his know-how into consulting and licensing services under Gym Launch. Instead of selling his time, he started selling proven systems and intellectual assets. This simple shift in thinking turned his business around from the brink of failure. Within just a few years, his annual revenue blew past $100 million. Average people fixate on hourly pay, while those with an upgraded mindset focus on building scalable, replicable assets. The second story is about Peter Thiel, the legendary Silicon Valley investor and co-founder of PayPal. Elites in the West are raised to embrace a competitive mindset, get into top universities, chase perfect GPAs, and fight for spots at cutthroat investment banks. Peter Thiel was once caught up in this rat race too, until he failed to land a clerkship with a U.S. Supreme Court justice. That setback pushed him to completely rethink his way of seeing things. In his book 0 to 1, he penned a line that shook Wall Street to its core: competition is for losers. When you're stuck in a brutal race against others, your profits and energy get drained completely. He changed his whole perspective. True wealth never comes from mindless competition, where you only try to outperform others by a small margin. It comes from building a one-of-a-kind monopoly. With this mindset, he backed Facebook in its early days, when it had virtually no rivals, and founded Palantir, a one-of-a-kind big data firm. If all you do is compete with coworkers or slash prices to beat rivals, you've already limited your potential. To reshape your thinking is to step out of the fray and carve out your own untapped territory. Here's the third story, and it hits close to home for all of us. Across the US and Europe, a movement called FIRE, Financial Independence, Retire Early, has blown up among high-earning young professionals. Its leading voice is Pete Adeny, better known online as Mr. Money Mustache. Before he changed his way of thinking, he was just like most Silicon Valley software engineers, pulling in a great salary, buying big houses and fancy cars. Soon enough, huge mortgages and endless bills trapped him at his job. He couldn't quit, and he couldn't even afford to get sick. Then he had a total mindset shift. He realized that the so-called high-quality life, hyped up by consumer culture, is basically just a hamster wheel built by corporations to keep you working non-stop forever. He completely redefined what money means to him. Money isn't for splurging on luxury goods to show off. It's a tool to buy time and freedom. He started putting over half his income into productive assets like index funds. In the end, he achieved full financial freedom and retired early at just 30, living life exactly the way he wanted. With a new mindset, he broke free from the chains corporations had wrapped around him. Take a look. Alex escaped the trap of trading time for money, Peter Thiel got out of cutthroat competition, and Pete smashed the chains of mindless consumption. All of them took their first step toward wealth by reshaping their thinking, but a better mindset alone isn't enough. Without practical skills to turn ideas into real gains, your thoughts will never amount to anything. So what powerful, tangible skills should you learn to secure steady work and income that no one can take away? That brings us to the next part. Section 2, Master Valuable Skills. Once you've upgraded your mindset, it's time to pick your real-world tools. Remember this: basic skills will only get you a regular job, but when you turn high-value specialized skills into assets, you unlock lifelong financial freedom. Now that AI and the internet have erased traditional corporate boundaries, top talent in the West no longer chases crowded jobs at big companies. Instead, they hone rare, powerful skills and run themselves like a one-person business. These 3 real stories from overseas will reveal the core secrets of turning skills into steady income. First up is Pieter Levels, a legend in the Western indie hacker community. He never worked for giants like Google or Microsoft. His core skill is simple, basic coding. Instead of trading this skill for a salaried job at a big tech firm, he turned it into standalone products that solve real pain points for digital nomads worldwide. He single-handedly built Nomad List, a ranking of top cities for digital nomads, and Remote OK, a platform for remote jobs. He handled everything from front-end and back-end development all the way to marketing and operations, all by himself. These days, he travels and relaxes on beaches across the globe, while the websites he built keep generating over $3 million in pure profit year after year, completely on autopilot. No staff, no office, just him and his coding skills. This is exactly what it means to turn a skill into a revenue-generating asset. Once you use your expertise to solve real problems for a specific group, money will keep flowing in for you non-stop. You might be thinking, I can't code, I'm just a regular office worker, how can I monetize my skills? Let's look at the second example, Justin Welsh. He used to be a corporate executive, but constant high-pressure work triggered panic attacks, so he quit his job without hesitation. His main strengths were years of B2B sales experience and strong writing skills. Instead of writing fiction, he focused these skills entirely on LinkedIn. He posted insightful posts daily that helped others solve real career problems, turning his way with words into a sustainable asset. Within just a few years, he built an audience of over 500,000 targeted executive followers on LinkedIn. Later, he packaged his sales know-how and writing expertise into 2 streamlined online courses. He runs everything solo with no big team, yet he pulls in more than $5 million a year just by selling his knowledge and writing skills. Writing is far more than just a way to communicate. In the internet age, sharp, valuable writing skills are your digital real estate, generating steady passive income like rent, month after month. Within just a few years, he built an audience of over 500,000 targeted executive followers on LinkedIn. Later, he packaged his sales know-how and writing expertise into 2 streamlined online courses. He runs everything solo with no big team, yet he pulls in more than $5 million a year just by selling his knowledge and writing skills. Writing is far more than just a way to communicate. In the internet age, sharp, valuable writing skills are your digital real estate, generating steady passive income like rent, month after month. Today, he's left clinical work behind entirely and become one of the world's highest-earning educational content creators and best-selling authors. His YouTube channel brings in over $5 million every year from ad revenue, memberships, and related merchandise. That's the true power of content creation skills. Traditional skills only let you serve an employer one-on-one. But when you use content to scale your expertise and share it with audiences across the globe, you make a massive leap from being an employee to building your own profitable business. Coding, writing, content strategy. These 3 successful solo entrepreneurs from the West have proven one thing: when your skills are no longer just for earning a paycheck, but turn into self-sustaining, income-generating assets, your greatest asset, yourself, will keep growing in value endlessly. Your financial safety net is now fully built. With an upgraded mindset and steady cash flow from your skills, you're finally ready to leave the employee mindset behind. Now we move on to the most crucial and exciting practical chapter of all. Armed with these strengths, it's time to explore the capital markets and hunt for the ultimate opportunities that can safely multiply your wealth 10 times over or even 100 times. Let's begin Chapter 3, Chasing 10x Growth Opportunities. Now that you have capital and a sharpened mindset, you've finally earned your ticket to the main arena of capital markets. But remember this: success here never comes down to who's the bravest. It's a ruthless arena where only those who know themselves well and master their human emotions survive in the long run. There is no such thing as the perfect investment tool, only the one that fits your current situation. Even Napoleon's powerful cannons would be nothing but a burden if handed to a jungle guerrilla fighter. Too many newcomers rush in and ask others, "What should I buy now? Which industry is booming? Which stock will surge tenfold?" This is a fatal mistake. You have no idea how much capital others hold, their risk tolerance, or whether they can sleep soundly after losing half their investment. Blindly copying others moves will only lead to ruin. If you want to seize big market gains, you first need to turn your focus inward and conduct a thorough self-assessment before you take action. That's the foundation of this chapter. Section 1. Know your personal situation. Before you see the market's ups and downs clearly, you must first understand yourself. When you sit down at the capital market table, your most important tool isn't financial reports, it's a thorough self-evaluation. No matter how tempting those tenfold return opportunities sound, run through these 3 critical checks before putting your capital on the line. If you can't give a clear answer to any of them, heavy losses and failure will likely follow. First factor, your risk tolerance. Many retail investors only understand risk as a number on a screen. They'll say, I can handle a 20% swing. But when a real market crash hits and their account loses $200,000, while everyone around them panics over a doomsday collapse, they fall apart instantly. True risk tolerance is shaped by your real-life circumstances. Do you have a large mortgage hanging over you? How much does your household need to cover expenses each month? Are there elderly family members or kids you're responsible for supporting? If your finances are already stretched thin with no buffer for emergencies, chasing tenfold returns through high-risk derivatives isn't investing, it's gambling with your family's future. Top players only go all-in on battles they can afford to lose. Second factor, your disposable capital. Keep this golden rule in mind. The nature of your money shapes your investing mindset, and your mindset ultimately decides whether you win or lose. If you're investing money set aside for tuition, wedding costs, or borrowed leveraged funds, this capital comes with built-in fear. Since you cannot afford losses, you'll panic and sell at the first sign of trouble or cash out hastily after small gains. You'll never hold onto an asset that can grow 10 times in value. Only when you invest true spare cash, money you can lose entirely tomorrow without disrupting your life for the next 5 years, will you wield the most powerful weapon against market algorithms, the infinite game. The size of your capital determines how fast you move, while the nature of it determines how far you can go. Third, and the toughest hurdle of all, emotional self-control. Charlie Munger once said, "You're cut out for investing only if you don't panic when your stocks drop by half." Capital markets magnify human emotions to the extreme. When you see mediocre stocks double in a single day, can you hold back envy and greed and resist chasing the rally? When panic sweeps the market and your quality assets lose half their value, can you overcome fear and add positions based on solid fundamentals? Most retail investors race their hearts out watching quotes all day and lie awake with anxiety at night. They aren't investing, they're torturing themselves. If your mood swings are dictated by fluctuating candlestick charts, every tool you hold will eventually turn against you. Figure out your risk limit, make sure you're using true spare money, and get your emotions fully under control. Once you finish this 3-part self-assessment, you've built an unbreakable barrier between yourself and market chaos. Next, you need to pick your core trading strategy based on time horizon. Will you be a short-term trader chasing quick profits or a long-term investor sticking with great assets for years? Now let's move to Section 2, the ultimate choice between trading and holding. After finishing your self-assessment, you face the biggest choice of your investing journey. What role do you want to play in this arena? Will you be a nimble short-term trader chasing quick wins on intraday charts, or a long-term holder who stands by great assets through ups and downs? Countless new investors get hooked on short-term trading, thinking earning 3% daily will fast-track them to financial freedom. But the truth from Western financial history is that these 2 paths lead to vastly different outcomes. Let's start with short-term trading. There is a legendary figure in Western finance, Marty Schwartz. He claimed first place in the U.S. Trading Championship and earned the title King of Day Trading. By using high leverage, technical indicators, and razor-sharp reflexes, he made millions of dollars in just 1 year, creating an astonishing success story. Countless trading creators on YouTube hail him as a role model. Yet they never talk about the heavy price behind this legend. In his autobiography, Schwartz admitted openly that years of high-intensity day trading pushed his mental state to the breaking point. He suffered from severe stomach ulcers and mental health issues. On several occasions, he was rushed away by ambulance due to sharp chest pain right in the middle of trading. He once said, "Day trading is not investing. It is a money game that costs you your physical health and peace of mind." What makes it even tougher is that Schwartz traded in an era before AI algorithms, relying purely on human skill. Today on Wall Street, over 90% of short-term trades are executed by high-frequency trading, HFT, quantum computers. Algorithms feel no fatigue, need no breaks, and can make tens of thousands of trades within microseconds. For retail investors to engage in short-term trading is no different from fighting orbital kinetic weapons with a pocket knife. Defeat is all but inevitable. If short-term trading is a meat grinder for ordinary investors, what does long-term investing look like? Take Nick Sleep, a legendary fund manager who rose to fame in London in the 2000s. His Nomad fund delivered an astonishing return of over 900% across 13 years. Yet his investment style was so unexciting that mainstream media found it utterly dull. He paid no attention to candlestick charts and never chased market rumors. Back in 2002, in the aftermath of the dot-com bubble burst, he spotted Amazon, a startup, then bleeding money heavily and widely downgraded by Wall Street banks. While traders across Wall Street shorted the stock and flipped positions constantly, Nick Sleep loaded up heavily on Amazon. Then he did something that went against human nature. He held firm. He believed in Jeff Bezos's logic of economies of scale and stuck with the stock for more than a decade. Even when Amazon's share price halved multiple times and plummeted as much as 80% during its darkest days, he never sold a single share. Eventually, Amazon grew into a trillion-dollar powerhouse. Nick Sleep and his investors reaped returns hundreds of times over. Long-term investing is never about betting on short-term price swings. It means picking the sharpest business minds of the era, backing them with your capital, and sharing in the wealth they create. Life-changing tenfold returns never come from split-second moves on trading screens. They are earned by walking alongside great companies through the long march of time. The painful experience of Marty Schwartz and the legendary success of Nick Sleep perfectly illustrate two sides of time. Short-term trading wears people down, while long-term holding builds compound returns. Now you have clearly set your course for long-term investing. Next comes a key question. What rational, sustainable profit targets should you set each year when making your investments? How do you kick the obsession with getting rich quick and truly understand the power of compound interest that can transform your financial status? Let's move on to Section 3, set reasonable profit goals. Now that you've committed to long-term investing, it's time for a tedious yet critical task, running the numbers. Most retail investors step into the market dreaming of tripling their money this year and quintupling it the next. Frankly speaking, anyone chasing get-rich-quick fantasies in capital markets is doomed to heavy losses. Only a handful of elite investors can sustain stellar compound returns over decades. Let's look at the hard facts. What's Warren Buffett's annualized return over the past 50-plus years? Roughly 20%. And for James Simons, hailed as the king of quantitative trading, his top-performing Medallion fund delivers a long-term annualized return of around 35% after fees. If someone claims they can double your capital every year, they are either a scammer or a reckless gambler teetering on the edge. Financially speaking, an annual return above 50% always comes with extreme risks that could wipe out your assets overnight. Those who chase unattainable highs often end up with nothing. Once you let go of the get-rich-quick mindset, let's work out the compound interest math that truly helps ordinary people achieve financial breakthroughs. Never underestimate seemingly modest returns. Suppose you build solid cash flow and put aside $100,000 in spare cash for long-term investing each year. We won't aim to match Warren Buffett. Let's set a realistic target, a 15% annual return, achievable through in-depth research on promising industries. Let's witness the magic of compound interest. After 5 years, your total principal and returns will reach roughly $775,374. It may feel slow, and you might be tempted to switch to short-term trading. Stick to your path. After 10 years, the figure climbs to around $2,334,928. Compound growth kicks into full gear, and you'll outperform 95% of your peers. The real miracle arrives at the 20-year mark. As the compound curve surges sharply upward in the later stage, your assets balloon to approximately $11,781,012. You didn't gamble on speculative crypto assets, nor did you compete against Wall Street's high-frequency trading algorithms. You simply set a realistic profit goal within your capabilities and waited patiently, letting time work for you. This is what Albert Einstein called the eighth wonder of the world. With realistic profit targets set and compound growth clearly understood, you now possess the rationality of a seasoned strategist and steady cash flow to fuel your journey. The long-term compound growth path lies wide and steady ahead. All your strategic preparations are complete. It's time to unleash the full power of this ultimate wealth-building tool. We will deploy your long-term spare capital into the era's most lucrative sectors, powerful catalysts that drastically steepen your compound growth curve. If you think a 15% annual return moves too slowly, and aim to seize transformative trends that can multiply your initial investment tenfold or even 100-fold over the next decade, what follows is an in-depth guide to risk resilience and real-world tactics. Now let's begin the final chapter. Tap into sunrise industries and acquire equity in early-stage startups to embark on your ultimate leap forward. There's a century-old timeless maxim on Wall Street: trend is your friend. Yet most ordinary people only interpret it through stock candlestick charts. They fail to realize its true power lies in life planning and career choices. Many people work diligently, burning the midnight oil day after day and honing their professional skills to perfection. But their fate was sealed the moment they picked a career. If they landed in a rapidly declining sunset industry, no matter how hard they strive to climb, they can never outrun the downward momentum of a sinking elevator. Top-tier players follow one simple rule when mapping out their lives: target booming sunrise industries with explosive growth potential. It's always best to plan ahead early, but even if you start late, you must pluck up your courage, cross boundaries, and start from scratch to break into these promising sectors. When you stand on a rising elevator, you will be lifted high by the general trend, even if you simply stay where you are. In Wall Street, there's a century-old timeless maxim: trend is your friend. Yet most ordinary people only interpret it through stock candlestick charts. They fail to realize its true, fate-shaping power lies in life planning and career choices. Many people work diligently, burning the midnight oil day after day and honing their professional skills to perfection. But their tragic end was sealed the moment they chose their industry. If they landed in a rapidly declining sunset sector, no matter how hard they strive to climb, they can never outrun gravity in a sinking elevator. Top-tier hunters follow one simple rule when mapping out their lives: is the industry a sunrise sector? Is it exploding with growth? It's always best to plan ahead early. But if you're late to the party due to hindsight, you must grit your teeth, cross boundaries, and start from scratch to break into these booming fields. When you stand on a rising elevator, the tide will lift you high even if you simply stay put. To drive home the power of the macro trend, let's look at a legendary case familiar to every household in Western media: Joe Rogan ***. In the 1990s and early 2000s, Rogan was a mainstream TV host, stand-up comedian, and UFC commentator in Hollywood, a glamorous career by all appearances. But Rogan spotted a critical shift. Young audiences were abandoning traditional TV in droves, and broadcast networks were in irreversible decline, a dying sunset battlefield. So in ***2009 14 years ago, when most mainstream media elites mocked online video and audio as amateur and hopeless, Rogan made a decision that changed his life forever. I'll refine the translation to match your original passionate, narrative-style tone for video scripts. Undeterred, he launched his podcast, The Joe Rogan Experience, in a simple, poorly equipped room. Back in 2009, the streaming industry was still in its infancy, and he was arguably late to the game. Even so, he planted his feet firmly on this sunrise track and never stepped away. Over the next decade, streaming and online content exploded upward like a relentlessly rising super elevator. Throughout this era, Rogan simply stuck to his signature conversational style. He barely changed at all. Yet the sheer momentum of the times lifted him straight to iconic status. Eventually, streaming giant Spotify paid an astronomical sum of over $200 million exclusively for the licensing rights to his show. That is the power of trend. While his former peers in traditional TV faced pay cuts, layoffs, and cancelled programs, Rogan secured a hundredfold increase in personal wealth simply by stepping into a booming industry. In the real world of wealth building, choice always outweighs effort. I'll translate this paragraph in a consistent, powerful narration style that fits your series. Joe Rogan's story proves that boarding the rising elevator is the prerequisite for capturing tenfold returns. But now, in 2026, an era dominated by artificial intelligence and decentralized networks, simply getting on board is no longer enough. Sunrise industries evolve at an unprecedented speed, and the protection offered by big companies is fading away completely. If you remain a mere passenger on the elevator, you can still be pushed out the moment the doors open. To securely claim your hundredfold returns in this era, you must complete your ultimate skill upgrade during the upward journey. You can no longer rely on any organization. You have to build the fundamental ability to survive and monetize independently, free from any person or platform. This brings us to the next key section. Section 2, build the ability to take off on your own. Entering a sunrise industry, congratulations, you've stepped onto the rising elevator. But if you still cling to the traditional employee mindset of clocking in and waiting for a paycheck, you will not escape the fate of being eliminated. In this era dominated by artificial intelligence and decentralized networks, the traditional big company safety net has completely failed. Layoffs flow like water in giant corporations. Organizations have become the most fragile shells. The underlying logic of wealth creation has shifted. The past, wealth came from organizations. The future, wealth comes from the individual. You must, as you rise, shatter all dependence on any system. Forge the hardcore ability to survive and monetize independently, anytime, without relying on anyone or any platform. This is the super individual, the one-person business. You must learn to build an unshakable personal brand, turning your name into your greatest credit asset. You must master AI tools skillfully, multiplying your creativity tenfold, 100-fold through algorithms. You must run yourself like a company, gaining absolute sovereignty over your time, assets, and destiny. Does this sound like a fantasy? Let's look at the hardcore, extreme super-individual myths taking over the West right now. In the Western digital entrepreneurship space, one name has become an icon for countless young people in recent years: Dan Koe. Not long ago, he was just an ordinary web designer, constantly stuck with demanding clients and endless revision requests. He realized that as long as he remained tied to the traditional business chain, he would always be nothing but disposable fuel at the bottom of the system. So he made a radically counterintuitive decision: stop chasing external jobs and start building a powerful personal brand from within. He hired no staff and rented no office space. Armed with nothing but a laptop, sophisticated personal brand operation, and extreme leverage of AI and automation tools, he embarked on his journey as a super individual. He consistently publishes high-value content on personal growth and modern business philosophy across social platforms. He leverages AI tools to outline video scripts, uses automated systems to distribute content around the clock, and runs a streamlined digital sales funnel to sell his digital products on autopilot. The result, operating entirely alone with no formal team, he generates an astounding $4 million in annual revenue with a net profit margin of over 95%. His powerful personal brand grants him extreme market premium, while his AI and automation systems serve as tireless cyber employees working for him 24/7. Dan Koh's success strips away all illusions of the old economy. It proves a revolutionary truth. You don't need to be the CEO of a 100-person company to build extraordinary wealth. Master personal branding and AI leverage, the two ultimate modern levers, and one person alone is a full-fledged army. Once you cultivate the ability to thrive independently and evolve into an all-rounded super individual capable of both offense and defense, you complete the ultimate leap in your investment journey. Equipped with top-tier business cognition, unlimited cash flow from skill monetization, and the premium value of a solid personal brand, you not only generate substantial personal income, you gain irreplaceable value that makes elite startups eager to recruit you. At this stage, you are finally ready to pursue the ultimate windfall that can multiply your initial capital tenfold, 100-fold, and elevate your social class permanently. Armed with the competitive edge of a super individual, we seize the most lucrative, early-stage tickets to the new economic era. And so we arrive at the final practical chapter of this entire framework: source early-stage startups and acquire life-changing founding equity. Now we've reached the final stop on this long journey to wealth, and the biggest, most well-guarded secret of this entire video. Let's face the harsh truth about capital markets. For regular investors, the odds of turning 10 or 100 times your money trading stocks on the public market are practically zero. By the time a company's shares show up on your phone app, Wall Street firms, venture capitalists, and the founding team have already taken all the biggest profits. All that's left for everyday people are scraps and sky-high risks. If you truly want to break free from your social class and grow your wealth exponentially, there's only one way in: get your hands on original shares or stock options while the company is still a little-known startup, long before it goes public. A lot of people will say, "Come on, really? I don't have millions to invest like a venture capitalist. How am I supposed to get early-stage equity?" That's exactly why I pushed you to build yourself into a *** super individual * earlier on. In today's digital business world, top startups don't lack cash. What they're starving for are elite talents who can grow their business, create hit products, and solve tough technical problems. Once you build an unrivaled personal brand, master AI tools, or develop killer operational skills, you'll hold the most valuable currency in this new era. You don't need to invest money to buy in. Instead, you trade your irreplaceable expertise, your intangible assets, for core equity and stock options in these booming startups. This is the only path for regular people to earn massive returns with little to no capital and change the fate of their families for good. Tech history in the West holds a real-life story that pulls off this strategy perfectly. It sounds almost too incredible to be true, just like something out of a fantasy novel. Back in 2005, something pretty extraordinary happened in the US venture capital scene. A brand new internet startup with just a few dozen employees moved into a simple office space. The founders thought the bare walls felt dull and lifeless, so they reached out to David Cho, a Korean-American graffiti artist who had built a solid reputation locally. The founder said to him, "Hey man, paint some energetic street art all over our walls to get our team fired up." Once the murals were finished, it was time to settle the bill. The going rate for the work back then was $60,000. Right before writing the check, the founder said something that would change David Cho's life forever. "We're tight on cash right now. What if instead of paying you $60,000 in cash, we give you 0.25% stock options in our startup for your work?" David Cho didn't get the company's business model at all. He even thought their product was going nowhere. But as a fully independent freelancer, he could afford to risk losing that $60,000 entirely. So he took a leap of faith, signed the option agreement, and grabbed that early stake. That cash-strapped startup, it was Facebook, and the founder was none other than Mark Zuckerberg. In 2012, Facebook went public on the Nasdaq, taking the world by storm. That 0.25% stock option David Cho earned just with paint, brushes, and a few days of work suddenly skyrocketed to $200 million. He never traded stocks, and he knew next to nothing about finance. He simply showed up at the right place in a booming industry and traded his one-of-a-kind graffiti skills for early stock options. This is the most dramatic, life-changing leap you can make in the world of capital, a true breakthrough to a whole new financial class. Let's recap what we've covered. We busted market speculation traps, built reliable income streams, gauged risk limits, and learned how to claim early-stage equity in rising ventures. After going through all 4 chapters, you'll realize top-tier investing is never just chasing trends on those red and green stock charts. Real investing means seeing where the world is headed, staying disciplined, leveling up yourself, and grabbing your ticket to the future. Your capital isn't gambling chips, it's your vote for the freedom ahead. If this video has totally reshaped how you think about wealth, and if you want to become a well-rounded, resilient super individual in this AI-driven era of 2026, hit the subscribe button down below and turn on the notification bell. On this channel, you won't find empty motivational talk or fear-mongering. I'll stand with you, stick to your strengths, master compound growth, and seize the opportunities of our time. Drop a like on this video. It lets YouTube's algorithm know our community of sharp, rational thinkers is growing. And leave 4 words in the comments: ultimate leap. Crunch the numbers, stand on your own 2 feet. The train of a new era is already departing. This time, take the wheel yourself.